Well, after a few pretty shaky weeks, the market really came roaring back, didn't it? We saw the Nifty just blast past a key psychological level, and the Bank Nifty took back a really critical milestone. I mean, it was a powerful statement from the bulls for sure. But the big question on everyone's mind is, what happens now?
Okay, so let's get right into it. The Nifty and Bank Nifty closed strong. Yeah, and we saw some real buying conviction pretty much across the board. But, the expert community is kind of split. They're all asking, is this rally the real deal? Is this the start of a new climb? Or is it just a temporary bounce before things head down again? It's a classic case of cautious optimism, really.
And this quote from market expert Pradeep Haldar, it just hits the nail on the head, doesn't it? He's basically saying, hey, hold on a second. One strong day, even with good volumes, it's just not enough to call a bottom. The market is at a serious crossroads. We're going to need a few more days to see if the bulls are actually back in charge. And that uncertainty, well, it sets the stage for a very, very interesting week ahead.
So to figure this all out, we've got to look deeper, right? We need to check out the stocks that have some real fundamental strength. So let's start with the industrial powerhouses. The companies that are the absolute backbone of the whole Make in India and infrastructure story. These are the giants literally building the country's future.
First up, the titan itself, Larsen and Toubro. You've probably heard the saying in the market, when this elephant dances, you better pay attention. And right now, believe me, L&T isn't just tapping its feet. It looks like it's getting ready for a full-on performance, breaking out of a long quiet period with some incredible force.
So what's lighting the fire here? Well, it's a massive catalyst. L&T just landed what it calls an ultra-mega order from Adani Power. And we are talking about a contract worth over 15,000 crore rupees. 15,000 crore. This isn't just another order on the books. It's a game-changing win that makes its already huge order book even bigger.
But, the price going up doesn't tell the whole story. The key thing to look at here is the delivery volume. It was a whopping 66.5%. So what does that actually mean? It means almost 2/3 of all the shares that were traded weren't just being flipped by day traders. No, they were bought to be held. And that suggests the big institutional money, the smart money, is stepping in with some serious conviction in L&T's long-term value.
So what's the bottom line? The outlook is strong. I mean, with this kind of momentum and clear institutional backing, experts are looking at an immediate target of 3,800 rupees. The key support level to keep an eye on is 3,500. It really looks like this elephant is set to keep on dancing.
Okay, from an industrial giant to a defense titan, let's take a look at Hindustan Aeronautics, or HAL. Now, unlike L&T's explosive move, HAL has been, a bit of a quiet performer lately. But don't mistake quiet for weak. It looks like the stock is just consolidating, coiling up like a spring, maybe getting ready for its next major flight upward.
For the week ahead, the outlook for HAL is still positive. I mean, it's got a strong order book. There are ongoing talks about exports, and the whole Make in India theme in defense is giving it some powerful tailwinds. The target is set at 4,600. A smart stop loss would be around 4,300. This is definitely a stock that's gathering strength for a potential breakout.
All right, now let's pivot to what might be one of the most fascinating matchups in the market right now. We're going to pit two massive index heavyweights against each other, and each one has a completely different story. It's the classic tale of a steady bull versus a raging beast.
So on one side, you've got the State Bank of India. I mean, it's the very definition of stability and institutional trust. And on the other side, you've got Adani Enterprises, a stock that just runs on pure raw momentum. Both of them rallied hard. But why they rallied? Well, that's where the stories are polar opposites. And understanding that difference is really key to navigating this market.
Let's start with the steadfast bull, SBI. The stock had a powerful rally, but what's really important here is the why. Just look at that delivery volume, over 55%. Just like we saw with L&T, this screams strong conviction. These aren't day traders, these are major institutions buying into solid fundamentals and what experts are calling the best asset quality in a decade. They see value, and they're planning to stick around. That's why the immediate target is 850 rupees.
Now let's flip that coin and look at the momentum rocket Adani Enterprises. An explosive 5% surge for sure, but look at the delivery volume, just over 22%. This tells a completely different story. The rally here is mostly being fueled by short-term traders and algorithms just chasing that momentum. It's a classic high-risk, high-reward play. Yeah, the path to 2,400 rupees is open, but it's a ride for the bold, definitely not for the faint of heart.
So beyond these two titans, there are several other sectors that are just buzzing with activity. Let's do a quick run-through of the other key stocks you should probably have on your focus list for the week ahead, from manufacturing champs to the backbones of retail. Turning to manufacturing and energy, we're seeing a few clear themes. Dixon Technologies is riding high on the government's PLI schemes, which are really boosting domestic electronics manufacturing. Analysts are targeting 16,500 there. In autos, you've got TVS Motor, which is leveraging both the EV shift and strong export demand. They're looking towards a target of 3,100. And in green energy, Waaree Energies continues to shine, thanks to policy tailwinds, with a target of 3,300.
Now, in infrastructure and retail, Polycab is a really consistent performer, tied directly to India's capex and housing story. It's targeting 7,000. But what's interesting here is its peer, KEI Industries. Experts actually see it as taking a bit of a breather with a more neutral outlook for the week. It just goes to show you the market is being selective. And finally, the retail powerhouse Trent is just continuing its incredible run, fueled by the super aggressive expansion of its Zudio brand. Analysts are eyeing a 5,500 target on that one.
Okay, so we've covered a lot of ground. How do we pull all of this together into a clear, actionable plan for you? Well, these next few slides are going to do just that, consolidating all this expert analysis into a strategic map for your week. So here it is, the roadmap for the powerhouses. This table isn't just a list of numbers, it's a summary of the stories we've been talking about. You've got L&T and HAL representing those fundamental order book-driven plays. Then there's SBI, your stability choice, backed by that strong institutional buying we saw. And finally, Adani Enterprises, the pure high-risk, high-reward momentum name. You can even see how the different support and stop-loss levels reflect those very different risk profiles.
And moving on to our key sector plays, you can see the clear upside targets for stocks like Dixon, Polycab, TVS, and Trent. Each one, as we discussed, is being powered by a really distinct growth story, from government incentives to export growth and retail dominance. Keep these support and stop-loss levels.
Welcome to the deep dive. We're here to cut through all that market noise and give you the real nuggets of knowledge, custom tailored just for you. Today is August 11, 2025, and wow, what a day. The bulls definitely showed up, didn't they? Shaking off those recent jitters with some real conviction. So our mission today in this deep dive, it's simple. Deliver the most critical insights on the key stocks that matter for your immediate one-week outlook. We want you to be well-informed, quickly, and thoroughly. Oh, let's unpack this. The Indie market, it really put on a show today. The Nifty, it started off a bit cautious, dipped down to 24,347.45, like it was testing the waters. But then, whoosh, it just surged, climbed all the way to a high of 24,600.85 and closed really strong at 24,585.05. That's what? 0.91% jump, a solid 291 points. Impressive. And the Bank Nifty, pretty much the same story, right? It just stormed past that big psychological 55,500 mark, closed at 55,510.75, up 0.92%. So what was really driving this strong rebound? What's the story behind the numbers?
Well, what's really fascinating here is the sheer power of the buying, both domestic and foreign institutional buying. We saw the FIIs, the foreign institutional investors, turn net buyers again, put in around 500 crore.
Okay.
And our DIIs, the domestic institutional investors, they just kept shopping. Over 2,000 crore from them.
Wow.
Yeah, so that combination, it really provided an essential backbone for the market today. Shows some strong underlying confidence, And if you connect this to the technicals, for the Nifty, that 24,500 level, that's now critical support.
Right.
For Bank Nifty, it's that 54,900 to 55,000 zone. Now, for us to really confirm this short-term momentum, we genuinely need to see maybe 1 or 2 days of trading above these levels. Sustained trading.
Okay, so those levels are key for confirmation. Need to hold above them. And was this rally broad? Or just a few heavy lifters doing the work?
That's a great question. And what truly stands out today is how incredibly broad-based it was. Not a single sector ended in the red.
That's pretty rare, actually, and a very positive sign.
We saw PSU banks doing well, up, 1 to 1.5%. The reality index gained 1%. Even mid-cap select was up 0.5%.
Yeah.
But, and this is important, while today's rally is certainly positive, a welcome change after weeks of decline, it doesn't yet confirm a definitive market bottom.
Ah, okay.
Yeah, patience is probably still a good idea.
Yeah.
We need to see if this trend reversal holds, especially with some mixed signals globally.
That's a crucial point. Speaking of global cues, yeah, things look a bit mixed, don't they? Some U.S. indices dipped, maybe tariff worries, but the NASDAQ held up. How might that international picture play into tomorrow's open? Can our domestic strength really cushion us?
You're right to flag the mixed signals. Those U.S. tariff threats, they could inject a bit of caution at the open tomorrow, sure. But the really robust domestic buying, especially from DIIs, that acts as a pretty significant shock absorber. It really suggests that the underlying demand for Indian stocks is strong. It could potentially allow our markets to ride out, mild global headwinds without too much disruption. That domestic resilience, it's a key differentiator for India right now, I think.
All right, that sets the stage really well. Let's shift gears now. Let's get to the core of this deep dive. Your essential stock outlook for the week ahead. We're going to dig into some specific names, the ones probably top of your mind, give you that detailed analysis for the immediate one-week horizon, and also a bit of a longer-term view. Let's kick things off with Hindustan Aeronautics Limited, HAL. The pride of India's defense sector, fighter jets, helicopters. Today, it was just a modest uptick, 0.1%, closing at 444.9. But here's the interesting bit. A really solid delivery percentage, 43.59%. That signals some serious investor interest, right? Accumulation.
Exactly. What's insightful here is that HAL seems to be undergoing a sort of healthy consolidation, right at a strong support zone, despite that tiny price move. And that high delivery percentage, it tells us long-term investors are likely building positions steadily, suggests real confidence in its long-term path.
Makes sense.
This is largely driven by, fresh government contracts, especially for Tejas upgrades and ongoing export talks. Geopolitical tensions are actually, helping that narrative.
Yeah.
Fundamentally, it really highlights India's push for defense self-reliance that significantly de-risks HAL's growth from global supply chain issues. That's a strategic shift, maybe still undervalued by some.
Okay, so strategic importance is key. What about the technicals?
Technically, we're seeing good support around its 50-day EMA, the exponential moving average. That's around 4,400.
4,400.
Yeah, a key short-term indicator. And it's reinforced by significant put option interest below that level, suggesting a solid floor. Resistance looks like it's around 4,600. So for your 1 week, maybe 10-day outlook, it looks positive, assuming global stability holds.
Right.
It seems advisable for investment, maybe targeting 4,600, with a stop loss perhaps at 4,300. Looking out, say, 6 months, HAL looks like a strong buy, targeting maybe 5,200, especially with expected defense budget heights. Keep a trailing stop maybe around 4,000. Earnings are strong, but, always keep an eye on potential export delays. That's the one thing to watch.
Got it. Strong case there for HAL. Now, let's shift to another big theme, India's manufacturing story. Dixon Technologies, big player in electronics, TVs, mobiles, saw a really impressive jump today, over 1.4%, closed above 16,000, and a bullish engulfing pattern too. What's powering Dixon?
Dixon is definitely charging ahead. It's effectively riding that upper Bollinger Band, which suggests strong upward momentum. Fundamentally, the surge is fueled by a couple of things. One, those PLI scheme payouts from the government are kicking in.
The production-linked incentives.
Exactly. And two, new manufacturing deals with global brands, especially as companies look for that China plus one strategy.
Diversification.
Precisely. Plus, you got the festive season prep starting. That's adding fuel to the fire. Technically, that strong bullish engulfing pattern. It's a key indicator of buying conviction. Support looks like it's at the 200-day SMA, simple moving average, around 15,000. Resistance up at 16,500. We're also seeing a positive EMA crossover, which kind of confirms the upward trend. So for the 1 week to 10-day outlook, sentiment's upbeat, investment advised, maybe targeting 16,500 upside with a stop loss around 15,500. Looking further out 6 months, Dixon looks like a prime pick, targeting 20,000 driven by that broader consumer boom.
20,000, wow.
Yeah, but given its high growth, high beta nature, diversification is always smart. Don't put all your eggs in one basket.
Good advice. Very clear on Dixon. But let's look at a slightly different segment, KEI Industries, wires and cables, right? Crucial for Infra. It cooled off a bit today, down about 0.79%, closed at 300 and 810. But again, look at the delivery, 45.51%. Significant. Is this just a blip or something more, given the Infra push?
I think this is what you'd call a healthy pause, that high delivery percentage. It suggests long-term investors are holding tight. They probably see this dip as temporary. The slight cooling off, likely due to those recent spikes in raw material costs. Copper, aluminum, that can squeeze margin short-term. But the underlying story, massive infrastructure spending across India that should absolutely wire it back up for future gains. Demand remains strong.
Right, the demand is there.
Technically, we saw a doji candle today. That signals a bit of indecision in the short term. Buyers and sellers are kind of balanced for now. Support seems to be at the 100-day EMA, around 3,700. Resistance up at 4,000. For the 1-week, 10-day outlook, I'd lean neutral, maybe slightly bearish just for the immediate term.
Okay.
It might be advisable to wait for a clear rebound before jumping in. If you do enter, maybe target 3,900, but keep a strict stop loss at 3,600. Honestly, for the very short term, holding cash here might even be prudent just given the risk.
Right.
Over 6 months, though, the outlook shifts, cautiously positive. Targeting 5,000 based on all those grid projects. Stop loss maybe around 3,200.
That's a cautious short-term view. But you mentioned the huge Infra push. Is there a scenario where maybe raw material costs ease up and it bounces back quicker than neutral to bearish?
Oh, absolutely. That's a definite possibility. If commodity prices stabilize or even dip a bit, KEI could see a faster re-rating, for sure. The sheer volume of projects, government and private, provides a really strong demand floor for their cables and wires. So yeah, this current pause, it might actually be a decent entry point for investors with a slightly longer view, assuming those cost pressures ease off.
Okay, that's helpful context. Now, speaking of infra giants, let's talk about the Titan itself. Larsen and Toubro, L&T, builds everything. Metros, missiles, stellar day today, up 1.69%, closing at 668.4. But here's the kicker, that delivery volume. A whopping 66.54%. That's huge. What's that telling us?
That 66.54%, that's truly the number of the day, as you said. It screams institutional buying. Massive players are piling in, showing real conviction. L&T's momentum, it's fundamentally fueled by these mega orders, both from the Middle East and huge domestic infra projects. And the scale is just, well, look at Adani Power. Just yesterday, August 11th, they awarded L&T an ultra-mega order. 15,000 core for 8 thermal power units, 6,400 milliW total.
15,000 core.
Yeah, and that's on top of L&T's Q1 net profit being up a strong 30%. So the fundamentals are backing it up. Technically, it formed a bullish hammer candle today. That often suggests a revival after a decline or continuation of strength.
Yeah.
Support was solid at the 50-day SMA, around 3,500. Resistance up near 3,800. We're also seeing a bullish EMA cross and the Bollinger Bands are expanding. That indicates increased volatility and strong price action, usually upwards in this context.
So the outlook?
For the 1 week to 10-day. Overwhelmingly positive, I'd say. Investment advised. Target 3,800, stop loss maybe 3,500. And connecting this to the bigger picture, 6 months out, L&T looks like a golden pick, targeting 4,500, stop loss maybe 3,200. Because that infrastructure wave for L&T just seems unstoppable right now.
Really paints a picture of that India build-out.
Okay, staying with essential industries, but maybe a slightly different angle. Mazagon Dock shipbuilders also had a busy day, up 2.3%, closed near 2,700. But interestingly, its delivery percentage was quite low, under 19%. What's going on there?
Yeah, that low delivery percentage is a critical flag. It really stands out. Despite the, long-term shipbuilding story being intact for India, that under 19% delivery suggests it's more trader activity, less long-term accumulation happening right now.
More speculative.
Possibly. The surge today was likely more of an intraday frenzy, maybe some buzz around defense exports rather than deep-rooted institutional buying like we saw in L&T or SBI. Technically, it formed a bullish Marubozu candle. That's a long green candle, little or no shadows, showing strong buying control from open to close.
Support seems to be at the 200 EMA, around 2,500. Resistance up near 2,900. So for a 1 week, 10-day outlook. Purely based on momentum, it looks strong. Investment advised may be targeting 2,850 with a stop loss at 2,500. But, and this is for your 6-month investor, well, the outlook remains, let's say, ship shape, targeting 2,500, stop loss 2,200. I would strongly suggest waiting.
Wait for what?
Wait for a small dip, maybe towards that 2,550 level for an entry. Avoid chasing the current momentum. That low delivery means chasing it now carries a higher risk of a quick pullback.
Okay, so momentum for traders, patience for investors. Got it. Next up, Polycab India, another leader in cabling, vital for power and infra, showed a steady gain today, 0.24%, closed at 6,757.5, delivery around 36.88%. What's the story here? Steady Eddie.
Yeah, steady current is a good way to put it. Long-term investors seem to be holding tight. The stock's benefiting from strong power sector demand, which is helping offset some of those recent metal price hikes we talked about with KEI. We also noted a promoter hike recently, which is generally a positive sign. Shows internal confidence.
Yeah.
Technically, it formed an inside bar pattern today. That usually suggests a period of consolidation before a potential next move, maybe a breakout.
Okay.
Support looks solid at 6,500. Resistance up at 7,000. The 20-day EMA is holding well, which confirms the short-term uptrend is intact. For the 1-week to 10-day outlook, mildly positive. Investment advised, maybe targeting 7.0 as a stop loss, around 6,400. And for a 6-month view, still looks like a solid bet. Targeting 8,500, stop loss maybe 6,000. Seems pretty reliable.
Polycab clearly showing strength in those foundational industries. Let's shift gears, though, over to the consumer side. Mobility, specifically. TVS Motor Company. Two-wheeler innovator, had a quiet day but firm, closed up slightly at 981.2, but with healthy delivery over 53%. What's revving TVS Motors engines?
The TVS Motors definitely pedal to the metal, as they say.
Okay.
With the festival season getting closer and strong signals coming from rural demand, that's a big plus. And then there's their aggressive EV launches like the iQube, which is doing well. Plus, their exports are growing. It's really powering their growth. This kind of speaks to a broader consumer shift, towards sustainable mobility, and India's growing export capability too.
Makes sense. Technicals.
Technically, it formed a tweezer top pattern. Sometimes that can signal a pause, but often in an uptrend, it can proceed further upside. Support looks like 2,900, resistance at 3,100. We're also seeing a bullish SMA crossover, another positive sign for the trend. So 1 week to 10-day outlook. Upbeat, investment advised, target 3,100, stop loss maybe 2,850. And for a 6-month perspective, TVS looks poised to zoom, targeting 3,800. Stop loss around 2,600. It's really a fantastic story of Indian innovation in the auto space.
Compelling indeed. Okay, from traditional manufacturing to green energy, Waaree Energies, solar panel powerhouse. Climbed another 1.67% today, closed strong at 312.1.1. Given the global push for renewables, this seems like a no-brainer beneficiary, right? But any caveats? You sound like there might be.
Well, Waaree is certainly experiencing a solar flare, no doubt about it. Driven by those green energy subsidies, the booming domestic solar market, it's all positive. However, it does raise that important question of valuation. The stock has run up, really run up considerably.
Yeah. How high is too high?
Exactly. Technically, it formed an engulfing bull candle today, indicating strong buying pressure. Supports at 3,000, resistance at 8,300. The Bollinger Bands are wide, indicating increased volatility. That often comes with these rapid price moves. For the 1 week to 10-day outlook, looks sunny. Investment advised, target 3,300, stop loss 2,900. For a 6-month horizon, it still looks radiant, maybe targeting 4,000 with a stop loss at 2,700. But, and this is a big, but for the 6-month investor, I would advise caution purely due to the high valuation, a fresh entry. Probably only advisable if you see a dip, maybe back towards that 2,800 level, because the ride from here is likely to be bumpy, even though the underlying growth is real. And that relatively low delivery, 27.79%. It also implies momentum traders are heavily involved right now, which can lead to sharper corrections if sentiment shifts.
Okay, so bright future, potentially bumpy ride due to valuation and trader activity. Got it. Let's pivot now to retail. Trent Limited, fashion retailers, Zudio, and all that. Saw a healthy 2.38% rise today. That continues a positive trend from the last couple of sessions. What's the secret sauce for Trent's consistency?
Yeah, for Trent, consistency really is king. The growth is largely driven by that super aggressive expansion of their Zudio stores.
They seem to be everywhere now.
Exactly. They're rapidly gaining market share, especially in that value fashion segment. It's a huge hit. We've also seen DIIs consistently buying into the retail sector overall, which signals confidence in the whole domestic consumption story. Technically, the stock looks bullish. Supports around 5,200, resistance near 5,600. Pradeep Halder, a well-regarded analyst, he noted the stock is actually at a support level right now and expects to go higher. He's targeting 5,800 and even 6,000 soon.
Okay.
Interesting.
So for the 1 week to 10-day outlook, yes, looks advisable for investment. Maybe target 5,500. Keep a stop loss at 5,000. For the 6-month view, still looks trendy, targeting 6,500. Stop loss maybe 4,800. Halder also suggested the current zone is buyable advising to hold with a stop loss around 4,850.
All right, now for two of the absolute heavyweights, the stocks that really set the tone for today's big rally. First, the conglomerate juggernaut, Adani Enterprises Limited, AEL. Huge surge today, almost 5%, closed near the day's high at 2,283.4. But again, that delivery percentage only 22.27%, very low for such a strong move. What do we make of this momentum? Is it sustainable?
Adani Enterprises today. It was like a raging momentum rocket, no doubt about it. But that extremely low delivery percentage. It also makes it feel like a tiger with clipped claws. Capable of these explosive moves, yes, but also really prone to sharp reversals, because it suggests it's largely driven by speculative, short-term trading, not long-term conviction buying.
Right, traders jumping in and out.
Exactly.
Yeah.
The rally itself is attributed to, positive news flow around its ports and energy businesses, plus improved earnings. And there was actually a significant announcement after market close on Monday. Adani Defensive Technologies, which is part of AEL, acquired 100% of Indios Technics Private Limited.
Okay, what do they do?
They're an MRO company, maintenance, repair, and overhaul for aviation services. It's a strategic move. Aims to establish India as a global MRO hub. Fits into the Make in India and aviation growth story.
Interesting. So technically
a very strong bullish candle today. It decisively crossed that psychological at 250 mark, which should now act as support. Immediate resistance is right at the high, 2,302. However, it's worth noting some short-term forecast models are suggesting maybe a downward sentiment or a mixed picture. That's critical for traders to be aware of.
So caution needed despite the big jump.
Absolutely. For the immediate 1 week, maybe even just 1-2 day outlook, a cautious stance is probably prudent. If the broader market stays upbeat, sure, AEL could reclaim 2,300, maybe target 10,340, potentially 2,375. But the critical floor is way down at 2,100.
Okay.
Short-term traders might consider selective buying, maybe above 2,180, targeting 200 to 60, but with a really tight stop around 2,120. Honestly, a very strict stop loss near 2,270 might be wise, just because of that low delivery. This stock can really, truly turn on a dime.
Got it. Very volatile. What about 6 months?
Longer term, 6 months. It still looks like a powerhouse. Targeting 3,000 stop loss, maybe 2,000. The underlying businesses are strong, but the ride will likely be wild.
Fascinating contrast there. Strategic growth versus trading volatility. Okay, finally, the banking behemoth. State Bank of India. SBI, another absolute pillar of today's rally. Strong move, up 2.4%, closed at 823.45. But what really jumps out here is that delivery. Exceptional, 55.09% on huge volume, over 1.5 crore shares traded. That just screams institutional buying, doesn't it?
Oh, absolutely. You are spot on. SBI is the steadfast bull in this market right now. And today's action. Textbook institutional accumulation. Clear as day.
What's driving that conviction?
Fundamentally, it's driven by really strong Q1 results. Net profit up 12% year over year. That's solid. But more importantly, perhaps, its asset quality is the best it's been in literally a decade. That significantly de-risks the bank's balance sheet.
And loan growth.
Still robust.
Okay.
You're seeing multiple brokerages raising their price targets now, mostly into the 925 to 955 range. That signals strong analyst confidence building up. Technically, it formed a bullish Marbozu-like candle, strong green candle, indicating buyers were in complete control pretty much from open to close.
Yes.
Strong conviction. Immediate resistance is right at the day's high, 825. Support looks strong between 815 and over 818, and that gap up area around 808. That's a critical cushion below that.
So the short-term outlook looks positive.
Yeah, momentum is firmly with the bulls here. Expect a swift move towards 832 and then probably 840 Odo if it can conquer that 825 level decisively. Pradeep Halder, whom we mentioned earlier, specifically called out short-term targets of €840 and 845 for SBI.
Okay.
So traders could probably ride rallies towards 830, keeping a protected stop maybe around 800.
Yeah.
And for the 6-month perspective, SBI remains incredibly reliable. Targeting 1,000 seems quite plausible. Stop loss maybe 850. Halder also suggested medium-term target of minimum euro if it sustains above 845. He even said any dip towards €818, 820 should be seen as a buying opportunity.
Wow.
It really highlights how a strong economy and improving fundamentals are boosting confidence in a banking leader like SBI.
Wow, what a fantastic deep dive across all these key stocks, these specific insights, really looking beyond just the headlines. It truly gives you, the listener, an incredible edge in navigating this market.
And, it brings up an interesting thought, something for you to consider.
Yeah.
Today, we saw the old economy, think infra, like L&T, PSUs like HAL and SBI, and the new economy like Dixon's tech manufacturing, Trent's retail, really firing together. on the same day.
Yeah, that was noticeable.
So the question is this simultaneous strength across such diverse sectors? Is this maybe the beginning of a truly broad-based multi-year super rally for the Indian market? Or was today just a powerful but ultimately isolated flash in the pan? Something to mull over.
That's a great question to leave everyone with. Thank you for joining us on this